The stock market looked like it was going to continue its booming trend this week. Friday's session was pushed down as Apple stock dropped heavily. The time of chasing growth might be over, along with all of the euphoria as investors are adjusting their portfolios, moving into value stocks. Can this be a warning sign that big changes are already happening? You came here for the truth, so let me unveil that for you. Today we're going to look at what has happened in the stock market. Then I'm going to connect it in with what's going on behind the scenes. I saved the best for last. Now look at this here. Apple stock dropped. So initially I had done a video in the after hours trading after Thursday's trading session. And I showed you that the Apple stock dropped by about 7%. And then I said, let's pay attention to what happens tomorrow. Looks like it could drop down this level. That was widely expected to happen, although some individuals didn't think so. But here we are. So you can see that it had declined at this rate here, even in after hours trading. It still moved into the negative. Now next week, depending on when you're watching this may be, not the case, okay? It could be in positive territory. The stock market had a few positive days this week, and obviously people were rejoicing, particularly those who invest in the FANG stocks. However, it didn't look so good for these FANG stocks, seeing as how they had declined quite a bit in such a short period of time. I mean, Amazon stock down 25% at its peak. So that right there shows us that even the biggest stocks can fall very hard and very fast. All right, let's move through this quickly. Warren Buffett loses nearly $4 billion in a single day on his Apple stake. So even for a guy like Warren Buffett, even for Berkshire Hathaway, $4 billion on a single day, that hurts. Now looking at a company like this, or an individual like this, we have to understand that there's a reason why they bought into these Apple shares, not just because of the expectation of appreciation. There are other reasons why they would want to. They were holding on to a lot of cash. He wanted to get out of that, clearly. I don't know what's going on behind the scenes, of course, but you can understand that when you have a company like this, they're sitting on money, they have certain stocks in their portfolio, maybe they want to add the positions when they can. There are different reasons. Anyway, just wanted to show you that. This is a list of the markets. If you look at the top three in the list, you can see the S&P, NASDAQ, and the Dow Jones all in the negative territory today. We watched them fall even as the market started higher. And this is the reason I show you this, and the reason I'm doing this video primarily is because even though the market should have risen today because they put out the fake jobs numbers, they put out all the fake economic numbers that we saw, and that usually does a good thing to spur, more buying and more of all the mainstream media garbage that comes out. And today it started that way. The NASDAQ was in the negative just a bit, okay? And then things changed. And then things really changed, all right? So that's that. I just wanted to show you this, what had occurred. Looking at this, Apple, the details, they show you all of it in this article. I'm not going to cover it. And I believe there's one more of that. In this one, though, they did mention something. Apple will stop disclosing unit sales figures next quarter, fueling fears that the company has something to hide. But Apple will disclose services gross margin for the first time ever, a potential catalyst for the stock. And this is what I really love about all these financial websites, that they're looking for a reason to buy the stock. They're never looking for just give me the answer. They're never looking for the truth. They're looking for a reason to buy the stock. That's it. That's what it comes down to. And I think this is a huge, huge problem that a lot of people are having. They're looking around. What can I buy? What can I buy? Okay, in this case here, I have all these analysts. If I scroll through this, they tell you why you should buy the stock and so on. Okay, it's going to be great. They're selling phones, they're selling iPads, they're selling this, all these new products. They have this many new services. They have this many subscribers. Oh, it's fantastic. But what I like to talk about is what is happening in the market. If you see strength, if you see progress, if you see productivity, if you see growth, and I'm talking about real statistics. When you see that, then most of the stocks, most good stocks, will go up. Sure, some are going to win more than others, okay? But if you think that the whole market is going to come up, then you can invest in some of these bigger names. If you don't think that the market is doing good, but you somehow think that these 1 or 2 or 3 stocks are a good buy, I just don't agree with that. And although there are times, definitely 100%, that certain stocks are doing well when the rest of them are not. But in general, we could see what happens, that one stock, in this case here, Apple, pulled the whole market down. Yes, obviously the size of Apple, I understand that. However, just look at it and understand what has happened in all these little mini crashes that we've experienced before. Stocks fall after wild session as conflicting trade news keeps investors guessing. Yeah, you have to be on your toes when you're an investor, and that's the way it is, okay? Now, this is what I wanted to get to. Thank you all for staying this far into the video. You get the real deal. S&P 1000 growth to value ratio versus FANG. Until recently, growth has been closely tied to the fortunes of FANG stocks. This brings us back from 2017 up until the present. So this is the Russell 1000 growth and the Russell 1000 growth ratio. That is the orange line. And the blue line is the NYSE FANG plus TM index. Okay, so the FANG stocks basically. And suddenly we see that's not really correlated anymore. A lot of individuals now, this is institutional investors of course, they've readjusted their portfolios to take on more value stocks and leave the growth alone. Reduce their positions in growth. It doesn't mean they're selling off all their Apple stock and FANG stocks. No, that's not what's happening. They are basically slowly, as they see fit, getting rid of some of these type of stocks, buying up these type of stocks. That's all. And it's been rather significant. You can see that orange line there did not come down quite as much as the blue line. Okay, so that growth, all that chasing of growth, that may not be the best opportunity for the foreseeable future while there's a little bit of turmoil and things. If we start to see that the market is coming up and everything is just fine and so on, then you will see these FANG stocks, they'll catch up to the rest of the value stocks and they will definitely do well. Historic spread between the Russell 1000 growth and the value. The spread between the growth and value indexes recently hit a record. All right, and guess when it was the last time we saw this level? Of course, the year 2000. So that just shows us what investors are looking at today. Again, that's the Russell 1000 growth and the Russell 1000 value. When you look at the ratio between these two, you can see clearly what's happening today is looking very strange. I'll tell you that much. It's not a typical thing to happen. Underlying all of this, the most important factor is the Federal Reserve. They're deciding what's happening on a daily basis. The Federal Reserve balance sheet decreased right now by the most in 6 years, basically, since 2012. It declined by what looks like $33 billion. It's taking way too long. They still have $4.1 trillion, and it's just taking forever to sell it off. It's going to, at this pace, it's going to be like the year 5000 before they get to actually dump it all off. And of course, they're not going to be able to, right? In the next crisis, they're not going to sell off all their garbage because that's just going to exacerbate the crisis. They're going to buy more. They'll try to get rid of some. I'd be really skeptical to see if they can get to 3 trillion. I don't think so personally, but we'll see. I'm not making any bets on that, that's for sure. And by the way, the statistics, if you want to see them, for yourself. This is directly from the Federal Reserve's own website. On that information, it's right here. I always try to include the actual source when I can. I want to show you the charts because obviously a picture is worth 1,000 words, but when I can, I always bring up the actual data. So I'll leave it in the description under the sources if you want to check it out. If you found the video informative, please give me a thumbs up, and give me a thumbs up. It helps to support the channel, so I do appreciate that very much. And last, but certainly not least, if you want the financial education that was withheld from you from school, you went through all those years of school, never learned a single thing about how to manage your own money, about the financial system, about anything to do with finance and money and everything all along with that, well, these two books have everything that you need to know. Okay, so it gets into for everything from foundation all the way to how to make money, the asset classes and everything. Check them out at the link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.